Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. Hope you're having a phenomenal day. I want to start by saying thank you for being an amazing part of my life. Welcome aboard. We got over 50 new subscribers from both videos from yesterday, 45 from the first, and somewhere in the range of what? There we go, 12 for the next. So this is awesome stuff. Deeply appreciate you jumping on board and just always liking the videos, commenting below, and just helping grow the channel. It really helps a lot. Because again, I do this for you at the end of the day. It really doesn't make me a ton of money here to make this content on YouTube, but it gets the vision out there and essentially hopefully helps you become a better trader. So when we look at the macro structure right now, we're going to talk about the weekly and the 3-day time frames here, mainly because the weekly candlestick closures are coming to a close here soon. Same thing here as well with the CME gaps. We want to talk about what that means for us this week. Liquidation data here kind of telling us that the bottom is still tentatively in. I want to emphasize that. And then, of course, the crypto market overview with some significantly large ETF net inflows. These are all very, very positive signs, things we want to acknowledge, we can't overlook, and we can't be uber bearish just because we have one red day here. That was pretty much expected. All right, so let's talk about that and much more. Be sure to stick around. Let's take a look. All right, folks, before we jump into the backend data and quickly analyze the macro structure here for Bitcoin, just want to remind you to make sure to take advantage of this exclusive offer for Bitunix, $16,000 individual prize pool, as well as a USDT $10,000 airdrop. So awesome stuff. Be sure to check that out. It's all linked down below for you for that. And it's off to a good start here so far. We got some high volume traders rocking and rolling. So let's look at the backend data really quick and kind of discuss here kind of foundationally first the weekly structure, because we are above our super trend indicator. We're also above our key level 20-day SMA. And I've done some statistics here for you folks. And generally, anytime we see the 20-day SMA or the price above the 20-day SMA, it lasts for a while. In other words, we saw 168 days of continuation back from September until March. And then from March through April, we saw some retracement there to that 70K range, the low 70K range, and now we're up here on the 110 plus, okay? So the key takeaway here is that every time we go above the 20-day SMA, we maintain it for a while. We're now 140 days into that continuation, okay? So just some random statistics there. It doesn't mean we're just going to go shooting straight up here, but it does imply that good sustainability is in this range of 108 to 110K as that local bottom. Okay, so that the weekly structure to me looks pretty positive. We're also maintaining above 50 in the RSI, and our volume is starting to increase here. We're starting to increase and become or get back up over that moving average, and that's super important on the weekly time frame. Okay, so that's kind of where we're at there. 3-day time frame, also above our Gaussian channel there, or Gaussian. Somebody is obviously going to correct me in the comments there because why wouldn't you? But regardless of how you name it or specify it, or pronounce it rather, we can see we're above the 20-day SMA, the 50-day SMA. We're above our local high there. Basically, that's 106K. That was that previous high close, working as a new low. And then, of course, we can see here we're starting to converge on the MACD too. So these are all very good early signs here of continuation potential higher. So I just kind of want to bring this to your attention. It doesn't mean, again, that we're just bullish to the moon and we have we never pull back. It just kind of tells us that we're on the right side of tracks. The continuation potential is getting higher as we continue to maintain this range and increase by maintaining higher highs and higher lows. Okay, those are things we're going to be looking for here too, with potential trend reversals. Now, speaking of trend reversals, is it gonna, are we going to see this reversal here soon? A lot of coins are overextended. Solana, for example. Now, somebody mentioned in the comments. Feel free to mention it again. But there was some type of fundamental catalyst for Solana, some kind of something that is increasing the amount of volume flowing into the coin. Okay, so keep in mind it's performing much different than most coins right now, and is pulling back very minorly. In fact, if we look at a CME gap that started at 242 or closed on Friday at 242, we're pretty much right exactly there at this point. Okay, so that CME gap is likely not going to even exist because we're likely to close or essentially maintain that range. So just know we may not see a CME gap for Solana. Looking at Ethereum, this one's a little bit bigger. We got a $4,700 top there. Essentially, that's where the CME futures closed on Friday. And right now, we're as low as about 4,600 is a rough estimate. Okay, so that's kind of where we're at there. And then Bitcoin, of course, same things as well. 116.8. 116,850 to be exact. We're seeing that as the local high there, essentially, for CME futures. That's where we closed on Friday. And right now, the price point is roughly 115,300. So there are two CME gaps essentially likely to get formed there for Ethereum and Bitcoin. All right, so let's move on to liquidation here and kind of recognize this. I like to touch on this just because it helps us to understand like the disparities between coins, the main ones we cover here today, but also just in general, where all the money is flowing into, because ETF net inflows is something that we like to pay attention to. While liquidation doesn't directly correlate with ETF inflows or outflows, it tells us the bias towards certain coins. In other words, Bitcoin has 14 million longs liquidated versus 4 million, right? So that puts us at what, like 4.5 to 1 ratio there, basically telling us that we're starting to see that decline, and that while the price is pulling back right now, it's normal for that to happen, right? So this is actually very good. We want to welcome this. If you saw my video from yesterday, it was labeled as final shakeout because I feel like this is one of the final pullbacks before we see our next leg up. Once more, just a lot of supporting factors below the price. Furthermore, Ethereum is only like a 2-to-1 ratio there. We can see 51 million longs liquidated versus 21, but the disparity there is in Solana. Actually, no, it's breaking even now because it's starting to top out in the 240 to 250 range. But the biggest one is XRP. Look at this, 11 million liquidations for longs versus 400,000 for shorts. Okay, so what does that tell us? That tells us market makers are sweeping those late longs there because a lot of idiots this weekend were starting to buy XRP. And I don't want to call you an idiot if you bought it. That's not what I'm trying to say. It's how you buy it that causes the problem. You're adding to your spot bag, you're not even part of this equation, right? So that's the concept there. Make sure that you're using leverage responsibly. Speaking of responsible, we did take some profits here from Crow Coin. We took a short position, 44% in 20 hours there. We shorted Crow at 25 cents. So 25 cents, that was good. Also took SUI XRP long. See, these are longs from last week with Litecoin, Ethereum, etc. So it was a good week for us here for sure. And we took some advantage on some of those shorts, even though I recommended not shorting over the weekend because this pullback, even though we are going to see a pullback, it may not be that large. Crow Coin was just begging to be shorted. If you saw my video from yesterday, you'll know what I mean by that. I discussed why that coin was significantly underperforming. We're probably going to see 21 cents or lower from it. Anyways, conversation for another day, of course, but be sure to watch that video if you weren't familiar. That was my secondary video if you caught that. Regardless, Fear and Greed Index, let's talk about this. We're just briefly here at 52. In fact, we got to keep this very brief. There's nothing really much to note here. We're in that neutral standpoint, but the fear index here essentially is letting us know that we're in a transition. So ideally, we're transitioning into greed, and we see a little bit more of a continuation higher because overall, when altcoin sees an index, this was in the 70s yesterday, still in good shape, by the way. We're in the $1.73 trillion mark. Anything over 1.5 is essentially bullish, in my opinion. We're in very, very good shape. So the thing I want you to walk away from this conversation or this analysis with is that altcoins are doing very well. While they're going to pull back, majority of them have key level supports below the price, which we'll identify today once more. And there's a lot of reasons why we're not going to be just monumentally pulling back. There's a probability of that, or a possibility rather. Of course, we can't rule it out. That's always something that could happen. But it's going to take a lot of money flowing away from Bitcoin. And for right now, if we look at our ETF inflows, they're super high, right? We got a pretty significant disparity from the last couple of weeks, letting us know that money is absolutely supercharging Bitcoin right now, and Ethereum as well. We're starting to see a significant increase in Ethereum as well. So keep in mind, these are two to 3 days behind. First of all, this is a weekend, so this is from this is Thursday's data, but it's still relevant, letting us know that leading into the weekend, even though we're seeing some selling pressure, it's going to require whales to dump massive amounts of Bitcoin to see the price action pull back significantly for altcoins. Let's take a look here at kind of where we're at. First of all, this is the Bitcoin time frame here. And just kind of speak of the time frames. We're looking at 7 days on the right here. This is open interest, letting us know that in the last 7 days, we have support at roughly every $1,000 mark. So 110, sorry, that's 111 rather, 111,000, 112, 113, 114. It's really simple. That's why round numbers are very, very important in trading if you're not familiar with that. That's why, generally speaking, I recommend take profit targets just below or above, depending on the direction, of course, so you can secure profits and not be, last in line, so to speak. So it's like, have you ever wondered why you haven't gotten filled at a key level round number? That's partly the reason. Anyways, those are open interest areas, i.e. support levels. We can also recognize liquidation long deltas at 14 billion. That's super awesome. Generally speaking, Anything over 10 shows a lot of strength. Once we start to dissipate, we start to see that pull back, then it may be a different story. We may have to have a different conversation. For right now, though, there's more longs and shorts, and that's the important takeaway. With liquidation here, there's the last 3 days of liquidation on the left-hand side. So just note, this isn't like super amazing. This just kind of tells us the recent chunks here over the weekend. We got a lot of longs that could be liquidated at 114.6 to 114 even, and then 117 to 118 roughly to the upside. So we're closer to the downside, though, so that could incentivize the price to pull back a bit lower. We also have a fair value gap as low as 114.5. So those are all things that are relevant to understand, but not super telling exactly, because this is a weekend, we have low volume. All right, so always remember that. That's the reason why on weekends we like to look at key level supports and resistances to identify areas of interest that we want to consider getting into. All right, it's more so positioning. You shouldn't be like shorting and taking a ton of longs on the weekends. Most good traders are sitting out on the weekends and waiting for that volatility through the weekdays. Once more, it really depends on your overall trading style. Scalping may be a different story altogether. All right, daily time frame still looks good. We're starting to see this natural slowing and pullback, essentially, kind of just letting us know we're still in good shape. There's nothing super crazy here. We're not seeing a monumental drop off there with our indicators. So the daily time frame is still in good shape. The key here is that we're over our point of control, and we're also over our 50-day SMA on the daily, and those are all good things. We're also seeing a nice little convergence here with the 50 and the 200-day SMA on the 4-hour. 113.5K is that support level for us based on that metric. Keep in mind, moving averages are not supports; they're just trends, and they're letting us know that we're on the right side of tracks, and the trend is our friend right now, and it's going up. Right? We're not establishing lower lows, lower highs, which we could very well start doing soon. By the way, if we do, we'll have a different conversation, but the key takeaway here is 113,000 was that local shelf, that local high. That's going to be the new low for us moving forward. So pay attention to that level. I think it's an extremely important, relevant number that we may see here soon. And if so, I'm going to be fairly well interested in a consideration for a long there at that range. How about yourself? What do you think you're going to be doing? Comment below. Let me know. Love to hear it. Let's take a quick look at the next series of altcoins. Quick heads up to my traders, make sure you take full advantage of this offer here from Bitunix. There's a significant deposit reward bonus as well as a $16,000 individual reward for just trading on the exchange. If you use my link to register in the past, you're automatically eligible. If you use my link to register now, you're eligible for all future trading bonuses and competitions. Check out the links down below for more information. All right, folks, let's take a quick look at Ethereum, see what's going on here in the backend data, and kind of go from there. As per usual, not much has really changed here from yesterday, but just to reiterate and reaffirm, 4,500 is that area of open interest here for us for that key level support locally. And if I'm not mistaken, 4,440 was also another area too that we kind of want to pay attention to here. So outside of 4,500, yeah, there it is, 4,440. So those are two easy numbers to remember. 4440 and 4500. Those are the key levels here for support on Ethereum if we see it continue to pull back based on open interest. The liquidation long delta is still remaining high, albeit tapering off a little harder than Bitcoin, but still not in bad shape. I think we stay above that 5 billion mark, still in pretty decent shape here, of course, but a lot of it hinges on Bitcoin too, because if Bitcoin continues to pull back, Ethereum is going to do so as well, and it might actually pull back a lot harder than Bitcoin because of that simple fact that there's a lot of profit to be taken in this coin. It pushed up a lot faster than Bitcoin recently. So all that said, I think it's best when we look at these altcoins here to kind of understand and more specifically identify just key level supports in case the price pulls back. Because I think the best anticipation right now is, especially with us establishing lower lows and lower highs on smaller timeframes, is that continuation lower is higher, right? We want to go with that mentality and that premise. Keep in mind, we're not going to see altcoins significantly dump. I think that's a low likelihood. But once more, it depends on what you consider significant too, right? I've been in the industry for a long time, and like a 5 to 10% correction is not that big of a deal. So it really depends on your perspective overall. All that being said, daily time frame for Ethereum is as follows. We have a fair value gap about 4470. Okay, so the key takeaway here is that fair value gap does align, at least the lower end of that gap there. It aligns very well with our key level supports at 4,500 to 4,440. So in a perfect world, we see that $4,500 range reestablished or retested and consider a long in that area. Okay, so that's not too far away, all things considered. It's a small percentage if you kind of look at it here. We are only about a 2.5 to 3% correction lower to see that happen. So just know that's an area of interest for me, is the 4,500 to 4,440 range. When we look at the MACDs here, the convergences, we do have an early indication with stochastic letting us know we're somewhat topped out. That runs concurrent in a lot of ways with our TD sequential indicator, just letting us know we're becoming overextended. So capitulation occurs at overextension, pending there is no euphoric or fundamental catalyst, which can happen sometimes with this coin. All that said, we're also moving down as well in that same amount of overextension. So we have an 8 on TD sequential letting us know we're reaching our tentative bottom. So I think the odds of Ethereum just going straight down from here is pretty low. In fact, 4,500 is probably still very low. As a matter of fact, it would require Bitcoin to see 114K. So somewhere in that range of 114,000. So a lot of this hinges on Bitcoin, but those are the areas I'm going to be interested in. We have a lot of confluence once more at 4,500, 4,450, even on the 4-hour time frame with both moving averages and our 0.618 fib level. But you can see this number here, 4,440 is a very consistent number, round number 4,450. So I'm heavily interested in a long in that range. Between now and then, I'm not going to blindly take that trade. I'm going to wait for the price action to get there, reevaluate, see what Bitcoin is doing, and consider taking a trade after. All right, that's where we're at for Ethereum. What are your thoughts? Why don't you let us know? All right, let's move on to Solana. Solana is a workhorse here. We keep on extending our fib levels here, and we keep on seeing push-ups. Continuous push-ups, one-handed push-ups probably, right, for this guy. Super easy. Now, once more, there are some fundamental catalysts. Please comment below if you know what they are. Somebody mentioned it earlier. I can't think of it for some reason, but the important thing to recognize here is that this is one of those unique situations that you don't want to short against. We tried to short. The trade invalidated pretty quickly, and I'm glad that we got out kind of early in that sense. The key takeaway here, though, is that with this continuation higher, the odds of correction is becoming greater once things start to fizzle out. It's that buy the rumor, sell a news situation. So there's probably some kind of rumor and or buying situation because of that. And it's important to recognize that things get kind of crazy and weird when those things occur. All right, so from a technical standpoint, though, let's take a look here and see if there's anything it might be telling for Solana and let us know where we're at. So we've already identified key level supports based on the macro time frame is at 220 to 210 range, right? So we got heavy amounts of open interest down there. When we look at the last 7 days, we can see there's a lot of support here too locally at the 227. I think that's a secondary most amount, but 220 to 227, 228, right in that range is essentially some support there for us. So if and when we see that, that seems like a sensible place to consider averaging into your position for a potential long. Obviously, reevaluate when we get there, but between now and then, 7 billion in liquidation long delta. This is almost as much as Bitcoin and Ethereum. So that is quite huge. Solana is becoming a beast here as far as market cap is concerned, and a lot of money is flowing in. So it generally implies sustainability. So I would not recommend considering a short in this coin. You're better off waiting for a long position, if at all, if that level even occurs, to consider a lower price point. But for right now, it's just too much to the upside, and the likelihood of correction lower is pretty low at this point. But we do have liquidation as low as 235 to 230. So my original inclination as of yesterday and the day before is that if the price does pull back, 230 would be a solid consideration for a long. Daily time frame, we do see a lot of fair value gaps getting created. The lower range of this fair value gap is 230. So what do you know? We're seeing confluence there at 230. So 230 is kind of reinforcing itself as a support, but also a potential desirable consideration for a long. We are over 70 in the RSI now, and this is generally a place in which you don't want to consider selling if you're in a long position until the RSI tapers back off and comes below, right? So while we are overextended, 9 times out of 10, you'll see the price continue higher once it breaks this threshold and continues further up. Okay, so it's important to adjust your stop loss higher. I wouldn't have a stop loss in like the 240 range. I would say like 230 or some would be good, because at that point, we'd probably lose our support and we'd be moving down to retest that local high. So just some things to kind of think about, but the important thing to understand here is this coin is just going bonkers. You'd be lucky to see the price pull back. If and when it does, we're going to need to see a significant correction from Bitcoin. Between now and then, I would be very careful trading this coin. What I mean by that is don't short. Okay, simple way to understand it. Only stick to long positions, but it's difficult to want to recommend a long at this 250 range where we're getting pretty darn close to our previous highs here. Okay, and again, our previous high range, just to give you perspective, 255 is kind of like that daily candlestick closure area. So between 250 and 260, we should start seeing some slowing pressure. That would be a place in which you maybe want to consider a short. Okay, between now and then, don't recommend it. Just before we take a look at the next altcoin, I want to recommend you consider trading with Bitunix. If you use my link to register down below or have in the past, you'll always be eligible for future trading competitions, but this one is awesome. It's probably the best one I've seen yet, with a full-on $16,000 individual prize pool, as well as a collective prize pool as well for the top 30 traders. Be sure to check out the link down below for more information. All right, let's move on to SUI, see what's going on here with SUI. Not much has changed here, really. This coin is actually still looking quite strong from a bird's eye view, but in last month's worth of trading, we can see 360 to 365 is that heavy area of open interest. And I think I've talked previously about 360 being a desirable entry consideration for a long. We can see it right there emphasized as a support there on open interest. So the 350 to 360 range is highly desirable. The thing I don't love here is that liquidation long delta is almost at break even. That usually implies a shift in momentum, letting us know that, hey, we have just as many bears as we do bulls, and the price could go down just as well as it could go up. Okay, so not really awesome stuff there. Last 7 days worth of trading, though, once more 330 to 350 is that heavy local low range of liquidation, and once more 390 to $4 is that upper range. So I personally am still leaning towards a long in the 360 range. Let me explain why here. First of all, with the daily time frame, we've obviously broken our descending trend. We are pretty well overextended, though. This is another thing where hopefully we can consolidate in this range before the next leg up, because we've been moving in the same direction for 13 days straight, which is up, right? What goes up must come down. It's just one of those natural things. So for the most part, the reason why that's important to note is because we could see a correction here soon. We're seeing early indications on the daily time frame with primarily stochastic RSI and tapering off here with our MACD. These are all just kind of early indications of loss of momentum, which is fine. That's normal. It's nothing to read into. But what we do want to read into is that point of control at 350. Ever since we've been in this range, 350 is a solid support range for us, or should work as such. So if we do see 360, 350 could very well be a secondary consideration. But the confluence here, to me, is pretty heavy. In other words, right there, 353 to 357, basically 350, 360, is an area of support with moving averages. We're also above the cloud here as well. And we can see our point of control locally is 360 if you exclude that lower 330 range. So those are all reinforcing support areas. Mainly, the thing you want to recognize, we got a previous high retesting itself as a new low. You want to expect that to hold as a support. So generally speaking, you're going to increase your odds of success considering along at that area. You don't necessarily want to short into that kind of support. Okay, so that's kind of the concept there. You always short after a bearish backtest, not before. All right, so that's kind of where we're at there. SUI's looking quite strong in my personal opinion. I think 360 seems like an appropriate consideration for a long. Taking a look here at XRP. This coin is just, we saw the liquidation of this already, remember? It was like, what, 13 million in longs liquidated versus like 400,000 in shorts. That's nothing, basically implying that market makers are just absolutely wiping people out right now, okay? So that's why you don't really want to use high leverage on weekends. If you do, you want to pay close attention to it. Hypothetically, you shorted at 320, good call. We took a long to that range. Personally, I think we got in at 295 as an approximate entry, and then we got out some of the 316, 317 range. I think it was this guy right here, 30% in 2 days. Well, it's not monumental profit. This coin doesn't move super fast usually, so that's the concept. But looking at the back end, if we recognize a few things once more, 303, 295 are those key areas of support based on open interest. That's half the reason why we got in the $2.95 to $3 range, because there's just so much support there. We have, and we can see here, liquidation short deltas shifted bearish. You may not be able to see it on the screen, but we're now in the red there. Furthermore, too, if we look at liquidation, we want to look at let's see what the last 3 days shows us. We can see there's a big chunk left down just below $3. So I'd be very surprised if the market makers left that alone. Okay, so one more quick wick down to 295, and then Bob's your uncle. That's essentially the concept there. So At this point, though, we can see a couple of important things. First of all, we got a significant amount of open interest at 303. We've talked about this previously. You can zoom out and you'll see that same range there essentially in play based on the simple fact that we have the most amount of volume there. Okay. So the price just pivoted and bounced off that level. That is a positive, right? And we take a look at the daily though, we want to recognize a couple of things here. We're still over 50 on the RSI. We're over our that's the 50-day SMA at $3 even. So while the price action should bounce from here, I would be surprised if we don't see a quick wick down to 295 to sweep those late longs. It's just kind of how market makers perform. Okay, so expect the worst, hope for the best. That's the concept, right? And we take a look here at the 4-hour time frame, just to kind of acknowledge there's a lot of support at the current price point, and also 295. Look at this. We got a nice little golden cross, as they call it here, at the 295 to specifically 297, but you could say 295 to $3 is that support. So we see, after analyzing this here, right, we see consistency at 295 to $3 that emphasizes support in that range and likelihood of price action continuing higher from here. So outside of a quick wick down, perhaps to sweep those late longs, I think we're in pretty good shape to see this 295 to $3 range here essentially hold as support. So I'm going to consider another long after waiting to see how this range holds first, or maybe even consider a long at 295 if that area of liquidation is swept, and kind of take it from there. But for right now, though, keep in mind we've lost 50 on the RSI. Money flow index is low, albeit it's a weekend, and MACD is diverging. So these are all signs you don't really just want to take a long into. You want to see if the bottom is in first, all right? And the concept there remains the same. It requires patience, and not everybody has that. So whatever you got to do to become a more patient person, I'd recommend it, because jumping in or FOMOing into a long on a Sunday morning may not be the best consideration right now, okay? All right, that's kind of where we're at there. I hope that makes sense. I described it correctly. Don't forget to like, subscribe, and follow if you haven't yet already. We'll look forward to working with you. Have a great rest of your day. And if you do want to become a better trader, cryptocash.tech is the site. Link down below. We'll see you in the next one. Take care out there.